Traders, welcome to the video. In this video, I want to quickly drop a quick strategy for you that you can use to scalp the boom and crash market. So if you look carefully on my chart, this is the 5 minutes time frame and this is boom 1000. And if you look on my indicator windows over here, I have two moving averages and I also have alligator indicator and also the RSI. The RSI marks out the level 80 and the 20, where 80 is the overbought level while the 20 is the oversold level. So this is a spike strategy. We are cashing spike to the upside. We can also catch the retracement if you want. It all depends on you. So before I explain how this strategy works, let me quickly show you settings to my indicator. First thing you do is to click on this indicator icon over here. I have just 4 indicators. I have 2 moving averages, relative strength index, and the alligator. So for the moving average, click on the F icon on the main chart. Moving average. Make your period to be 50, shift to be 0, method to be Lillian weight, apply to low, style to pixel, and select color of your choice. After that, click on save. For the second moving average, click on the F icon on the main chart. Moving average. Make your period to be 25, shift to be 0, method to be Lillian weight, apply to previous indicators data. So you want this moving average to follow the previous moving average that we have added. Style to pixel and select color of your choice. After that, click on save. For the relative strength index, click on the F icon on the main chart. Scroll down a bit, relative strength index, click on that. Make your period to be 1000, apply to close, style 1 pixel, select color of your background. If your background is black, you select black. If it is white, you select white. The main thing we need here are the levels. Click on this pen icon to add level. Add, type 80 and 20, style, make it 2 pixel and select color of your choice. After that, click on save. For the alligator indicator, click on the F icon on indicators windows 1. Scroll down. This is alligator. Click on that. Make all these ones to be 4, jaw, teeth, and the lips. Method, Lillian weight, apply to median price. Make the jaw style to be 2 pixel and select color of your choice. Teeth style, make it 1 pixel and select color of your background. Lip style, make it 2 pixel and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. This strategy, as said, you can use it to catch spike and also to trade retracement to the downside. So how do you go about that? So first, you have to determine if it is spikes that you want to be cashed or the retracement to the downside. So if you want to catch the retracement and also the spike, that means you want to be doing the two. You don't actually need to go to the higher time frame. But one thing you should know is that win rate might reduce because you are likely to get more fake out. So first, let's talk about if you want to be catching the spike to the upside. So you can see over here, this is boom 1000. So for you to catch spike, what you need to do is to go to your 4-hour time frame. You want to determine the direction of the market. So anytime the candles is above the moving average, so this is uptrend. So this is a very good condition to catch the spikes to the upside. And anytime the candles is below the moving average, then this is downside. So this is a good condition for you to catch the retracement to the downside. Then you want to go to your 1-hour time frame to confirm the movement very well. You can see over here, market has been in an uptrend. So if your 4-hour time frame is not clear to you, so you can go to your 1-hour time frame and look for a very clear direction. Then you can go to your 5 minutes time frame and then look for entry. So if you want to catch spikes to the upside, the first thing you want to pay attention to is this alligator enters into the 20 level. So you want to see a dip into the 20 level, then you want to see a change in market delivery. You want to see market create a low, high, low, high, low, and you want to see a spike to the upside that breaks the previous high and also breaks the moving average to the upside. So once you have that, immediately you have the break, you want to enter a buy, and then you put your stop loss below here. So one thing you want to make sure is that the candle that breaks the moving average is a very energetic one. You can see how long this candle is, which is telling you that more buyers are now in control in the market. So you can see over here, long spike, enter your buy, stop loss below here. And if you have confirmed from the 4-hour time frame or the 1-hour time frame that the market is bullish, then you can hold your trade. You can see from here, stop loss below here, market continues to go to the upside. You can see over here. But if you did not look at the higher time frame, you can just target ×2 of your money. So here, if you risk $20 or let's say $10, you close your trade once you see profit of $20. And if you use $20, you close your trade once you see $40. That is why I said once you confirm the higher time frame, you can be able to hold your trade for a long period of time. Why over here, for the sell scenario, you want to see alligator enters into the 80 level, a change in market structure shift, high, low. If you are going down, that means if you want to sell to the downside, high, low, high, valuation of this low, but did not cross the moving average. So here you do nothing. High, low, high, a low that breaks the moving average. But you can see that this is not the highest high that we have. This is still the highest high. So this is invalid. So you want to see market goes above this high. You have it here, low, another high. You have the valuation that breaks the moving average. So once you have that, you can enter a sell. Then stop loss will be above this high. Retest the moving average and then continues to sell to the downside. So you want to ensure that the low that is broken is coming from the highest high or the lowest low if you want to buy to the upside. Over here is also another buy condition. You have the alligator enters into the 20 level. Then you wait for a market structure shift. High, low, high, low. Enters into the 20 level. You have a break of the moving average, but the break did not go above this high, so it is not a shift yet. So you expect market to come down to take out this low. So this is the new low. But before we have this new low, we have a small high over here. Then we have market spike, break this low, and also breaks the moving average to the upside. Then energetic move. You can enter a buy, stop loss will be below this low. Then you can target ×2 of your money. So basically that is all I wanted to show you for this strategy. So everything you see in this bull market is opposite for the crash market. So go back on your chart, backtest the strategy, and then try and trade it in a demo account so that you will get how it feels when you are on a live market. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.